Kristen King from the Investing Channel, and you're watching Pink Diamond, the show where we help you find the diamonds in the rough of the pink sheet and small cap market. This week, we're looking at a sector that is going through a transformation: sports betting. Once only available through specialist providers and gambling centers such as Las Vegas, the industry is being opened up and states across the U.S. are legalizing the business, allowing companies to operate across state lines and probably on a national basis in the not-too-distant future. The company we're going to focus on is Esports Entertainment Group, and as its name suggests, the firm focuses on the rapidly expanding world of online and networked video gaming. This marketplace is still in its infancy, but it is approaching what we might think of as critical mass and can attract substantial audiences. In 2019, some 454 million people watched esports events online around the globe. That audience is forecast to rise to almost 650 million people by 2026. And as you might expect, money is being attracted into the esports space as brands and business try to engage with their millennial and Gen Z audience. Betting on esports is also a growth market. Esports Entertainment recently raised $30 million through a direct placing of 2 million shares at $15 per share. The business has also applied for its first U.S. gaming license with an application to the New Jersey Division of Gaming Enforcement, which it hopes will be approved in Q2 2021. That license will complement its existing license in the Mediterranean island of Malta. Esports Entertainment Group also announced its intention to acquire 2 gaming networks, Helix Esports and GG Circuit, in a deal valued at $43 million, so it's beefing up its offering across the board. As if to demonstrate that, the company has forecast revenues for 2021 of $18 million, up from its prior estimate of just $13 million. There's plenty for investors to chew over here, but that is not even the most intriguing part of the esports entertainment story. In the last few days, the stock has been picked up by Trackstar IQ, our proprietary search tracking database, which has identified 11 requests for information on the company from Wall Street professionals. So why are institutional investors trawling the internet for information on a $335 million company? Well, the answer to that can be found in a story that was circulating late last week. Citron Research, one of the firms that were short of and got squeezed hard in GameStop, have come up with an intriguing idea, which would be for GameStop to acquire Esports Entertainment. The analysts at Citron Research said what they have learned from the past 4 months in GameStop were 2 easy takeaways. People love video games and people love to gamble. A combination of the 2 would allow GameStop to transition to a new growing business, and rather than continue to sell low-margin hardware and video games to its 55 million registered customers, it should start selling high-margin services such as esports betting. GameStop shares have rallied sharply in recent days, jumping by more than 200% in the last week, whilst Esports Entertainment Group stock leapt from $15.34 to as high as $24.30 as the story broke. Citron Research also noted that esports betting was worth $14 billion in the USA alone during 2020, and this was something that GameStop should aim to get a share of. Even if GameStop aren't interested in doing a deal, Esports Entertainment Group has now been highlighted as a takeover target in a rapidly growing industry, and that means it should certainly go on our watch list from here on in. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar. Small and microcap stocks can be high-risk investments, so before you make any decisions, please ensure you do your own due diligence.